just because it's a bear market does not mean you can't generate insane amounts of passive income on blue chip crypto assets. I've said this before and I'll say it again. Yield farming is by far the best way to generate passive incomes on a risk adjusted basis if you know what you're doing. I mean, unless you can build a trading algo or something like that, which most people can't, you can't get these kind of yields anywhere else in the world. Yield farming is the best right now, and I'm going to show you that. So before I get into this, I have to let you know that this is not financial advice. Please consult with your financial advisor before making any kind of investment decisions. This is for your education purposes only. Please do your own research. So in this video, I'm going to give you a brief market update. I'm going to go over my strategy and how I'm generating passive income in a bear market. I'm going to show you how to get paid to buy the dip. I already showed you how to get paid to short the market and minimize your risk of getting liquidated. And in the end, I'm going to show you my live farms. I'm going to show you the APR that I'm getting. I'm going to show you all of the data, and I'm going to show you how to track it for yourself, as well as how I'm taking profits and being flexible when the market goes up and down. So you're about to see that just because everything is red all around you, like how it is behind me, doesn't mean you can't still be in the green, if you know what I mean. So let's get into it. So let's start with the market update. There pretty much isn't anything that's making me bullish on crypto in the short term. We have inflation still out of control. The Federal Reserve is still raising interest rates, which is sucking money out of the system, increasing the debt of other companies, which is making them have to sell off their assets. And I believe this trend is going to continue as they try to get inflation under control. You have FTX, who is going to go bankrupt. And the reason why a bankruptcy can cause the market to drop is because once everything gets settled in court, however it is, someone's going to have to get paid off, whether if it's the investors who actually back these firms or the customers who have their money on them. Some of them or all of them are going to get paid everything or a portion of it back, and that's going to result in the company having to sell those assets. And once they sell those assets, the ethereums, the bitcoins, the altcoins, that means the market is going to have to drop. It's basic supply and demand. The Bitcoin halving isn't until 2024, so we have a ways to go before people start buying in anticipation of the halving. So it's a lot of things that's causing selling pressure on the market. So I'm going to show you what we can do about it. So the strategy that we're going to be using to generate passive income is market making on Uniswap V3. If you haven't watched my video on how I'm making $1,000 a day market making on Uniswap V3, I'll leave it in the description. I definitely recommend you watch that video first. And the biggest thing about yield farming is that these companies that are market making for exchanges like Robinhood, New York Stock Exchange, they're not allowed to do any market making within crypto. So it's the everyday people like you and I who are allowed to market make and generate money for just depositing our assets idly and not doing anything after. It's passive income, but somewhat active management, and you'll see what I mean here. So the pair that I'm going to be showing you is ETH and USDC. You guessed it. And I could do this for Bitcoin USDC, but ETH has the highest trading volume and it's the best money maker right now amongst blue chips. There are other pairs that I'm LPing for. So you see this chart here. We're in a clear downtrend. We're on a weekly chart. We're creating lower highs and lower lows, right? So we have a high here, a high here. This high is higher than this high. We have a low here and a low here. Same thing. Okay. So it's two things you don't fight. You don't fight the Federal Reserve, right? And you don't fight the trend. The Federal Reserve is constantly raising interest rates, which is part of the reason why crypto is dropping. And we have the trend going downwards, okay? So if we look at the S&P, we can see that we're still in a downtrend. And once they announce their next rate hike, this market is probably going to drop here into our accumulation box. I've been talking about this for months. Okay, it's still in a clear downtrend, lower highs and lower lows. Same thing with the Dow. Well, the Dow's been consolidating more. But again, Apple is a large portion of this, and they're in the middle of one of the largest stock buybacks in history. So this is the artificial. The NASDAQ still in a downtrend. So you have the major stock indexes in a downtrend. So let's go back to ETH. So here's my strategy, and I'm going to show you how I'm getting paid to buy the dip and why this makes sense in a bear market, okay? So first, you want to develop a thesis on where you think the price is going to be for however long you want to be in this farm. So I think that ETH will trade between 1,400 to 600 for the next few months, okay? So what I want to do is set up a few ranges that will allow me to make money when it's in that range. And what I did was just pay attention to these white boxes here. I set up a large range from 700 to 1400, okay, because I think it's going to be in there for most of the time. And I put the bigger amount of money there. And then I set up a smaller range for 1100 to 1350 because I think it's going to be in there for a shorter time. Now, the tighter your range, the more passive income you make, the higher your APR. The wider your range, the opposite. But you remember, you have to factor in impermanent loss. So if ETH goes out of range to the downside here and it goes below 1100, it's pretty much a limit order for the loser. I'm going to be in 100% ETH. And if it goes out of range to the upside, I'm going to be in 100% USDC. I'll tell you why impermanent loss doesn't bother me with this strategy in this pair. Because I'm using this to buy the dip. That's why. If ETH goes out of range to the downside, and I hope it goes out of range to the downside below 700, because I'm going to be in 100% ETH. So I just bought ETH at $700. So now I get out of that LP, I sit on the ETH, I wait for the ETH to go back up, or hey, maybe I think it's gonna range from 700 to 1,000. You know, normally when there's a large dip like that, I like to wait a while and see what happens. So if that happens, like I said, I'll get back in when I feel like it's feasible. But this allows me to get paid to buy the dip. So the whole time price is going down, 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 people are exchanging ETH to USDC. So they're using my liquidity, so I'm getting paid. And in times of higher volume, the APR is going to increase. So hopefully that part makes sense. As far as the smaller range here from 1350 to 1100, I'm pretty much, this is one I'm going to be rebalancing when it goes out of the range. So if it, let's say price goes below 1100, well, hey, I'm going to get out of this all the way. I'm going to sit on it. If I think price is going to go down, I might enter another position, maybe from 1100 to 700 or 1100 to 800. But I'm going to take some of that ETH and send it to another wallet, because buying ETH below $1,100 is a steal. Okay, that's a great deal. I'll take that all day long. Normally, if you're setting up a limit order, if you're going on exchange to buy the dip, you're having to pay a large fee, or a fee. Let's not even call it a large fee. But with this strategy, not only are you making passive income as you're waiting on it to go down, as it goes down, the smart contract is automatically buying the dip for you, and you're getting paid to do so. There isn't anywhere else you can do that. So just to reiterate, as long as price is between these two boxes, this one here, I'm making money. And the tighter the range, the higher my APR. And as long as price is between this white line and this white line, I'm making money. Not as much, but this one is less risky, so I put a larger amount here, okay? Risk management is important when it comes to strategies like these. The higher the risk, the lower amount of money that should be in it, even if it's ETH and USDC. And again, impermanent loss isn't as big of as an effect, because if it goes down, I just bought the dip for cheap and I know ETH is going to go back up. And if it goes out of range to the upside, well, hey, now I made some fees. It took the profits for me. I'm going to sit on that USDC. The reason why I put my range at 1400 is because this has been acting as a prime area of resistance. So you can see how many times it's bounced off here, got above it here, boom, and now it bounced off again. This is in a line with the trend line here that it's been following since November of last year, same trend line. And $1,400 is a major level of resistance because it was the previous high during the last cycle, as you can see here, okay? So it's a psychological level, all right? So now I want to talk to you about another thing. So I'm going to show you my live farms here in a bit. But when you provide liquidity, like let's say you want to provide liquidity for 1400 to 700, right? Now, if price was in the middle of this range, you would do half USDC and half ETH. But given that price is at the top of the range, you're going to have to do the math and figure out how much more USDC you're going to have to do. Because remember, you can even do things like price is at 1,269 right now, and you think price is gonna range between 900 to 700. You can provide liquidity for that range, and now you'll just be sitting on 100% USDC, and you won't start to buy ETH until the price goes between your range, which would be $900 to $700. So you can use this as a limit order mechanism, okay? But the only thing is, once it gets in, you know, if it's a flash crash, you'll be in and out. You'll make a little bit of passive income, but you want to set alerts on your phone so that once it gets there, you can get to your phone and either exit the position or whatever you want to do. You want to have your strategy outlined before you get in. Going back to what I was saying, whenever you're putting liquidity and it's unbalanced, meaning, you know, I want to provide liquidity for 1400 to 700, and right now price is at 1,269, you're gonna have to put more USDC in this liquidity position than you do ETH. And I'll show you this here on Uniswap. So if we look here, this is the position from 1400 to 700, and as you can see, it's 84% USDC and 16% ETH, and I set it up that way. And I just got into this position today on this wallet so I can show you guys. And then if we look at my other position, which is the tighter range, I am in 69% USDC and 31% ETH, okay? Now here we are at Revert Finance, so I can show you the tracking, okay? So here is the larger one from $1,400 to $700. This gives you all the data. As you can see, I've been in it 0.1 days. I just hopped in this, and I'm getting 20% APR. Where else can you get 20% APR on a blue chip asset like ETH without pairing it with some shitcoin or giving up custody to an exchange where they can do fractional reserve banking like FTX? Like, Uniswap is non-custodial. The funds are still in your wallet, and you can still get out whenever you want, okay? So 20%, that's incredible. And this is how you track it. It gives you the total APR, the fees, you know, when you got in, it shows your range. It shows, you know, I like to call this a liquidity mountain. This is pretty much where everyone thinks the price is gonna go because this is where most of the liquidity is. A lot of people think ETH is gonna drop, and that's why most of the liquidity is to the downside, okay? And it shows you how long you've been in it. It gives you your NFT ID and everything. And here is my other LP that I was just talking about. This is the tighter range one from 1100 to 1350. You see how the box is smaller. You see the liquidity. You know, you can see that I've been in this one for pretty much 0 days today, but I'm making 49% APR. I got in this pool right before I shot this video just so I can show you. So, and I have other wallets where I'm in tighter ranges, looser ranges. Like, I'm telling you guys, this is a bear market, but your boy is out here printing money, and you can too. So in closing, I just showed you my strategy for generating passive income in the bear market. Just to reiterate, the most important thing is to come up with your own thesis as to where you think that asset's price is going to go. And, you know, you just come up with what asset you like, which ones you want to accumulate ahead of the next bull market, and get a yield on it. And just stack and stack and stack, because this next bull market that happens is going to be the craziest one, in my opinion, because it's going to be the one where we have the Fidelities and the Goldman Sachs, like the major market makers, the major players, the BlackRocks, like the largest financial institutions in the world are finally getting themselves and their clients involved in crypto. And they're going to set a new floor. Like, after this bear market, I can almost guarantee with 100% certainty that we will never see these prices again. We will not see a ETH below $1,000 or $1,200. We won't see that again. And eventually, mainstream financial institutions are going to be granted the regulatory green light. So they're going to be able to do market making in DeFi, which is going to drive out the everyday people like you and I, because they're going to come in there with their billions and trillions of dollars, just like they're doing in the traditional financial space, okay? So if you like this comment, share it with a friend. Hit like, comment, subscribe. I'm trying to grow this channel. And if you want to join us, click the link in the description and fill out the Google form to get into our Discord. We're only letting a certain amount of people in. We're trying to build a community where like-minded people want to generate passive income and just learn as much as we can, bounce ideas off each other, and, you know, just that iron sharpen iron vibe. So I thank you so much for tuning into this video. I love all of you, and I'll see you in the next video.